Evening, everybody. It's 6:40 on this Thursday afternoon, and this is your closing comment video number 1812, the War of 1812. Okay, so it's Thursday afternoon, and here's what happened. We had a fairly substantial revision in first quarter GDP from 1.3 all the way up to 2. And while that may sound good to you, and half the jackasses who talked about it this morning, half of them said it was great, the other half of them said it was horrendous. The bottom line is it spiked interest rates, and the chart on the screen is the 30-year bond. And this is important to me specifically because we have a position and we're short. Short the bond, long interest rates. And so I wanted to show you this is a bear flag that we broke down out of, fell, went right back up and tested, and then had this major cascading move from 155, no, 159. So from 160 in two stages, the first one down to 131, and the second one down to the recent bottom at 117 and change. I point that out because that's what I've been talking about here. And this is the weekly. Let me go to the daily, and you'll get a much better look at what I've been waiting for and what we got today. And that is that same kind of flag down here. And here's what it looks like on the daily. On the weekly, it's still above the line. On the daily, it ran into the falling 200-day moving average, tried once, twice, three, four, 5 times in the last 6 days. And if you want to take it a little further back, more like 12 times in the last 15 days. And we came down here back to under 126, 125.30. This closing low is 125.27. So if we can extend out of that, this will be a very profitable trade. So there you have it. In the rest of the commodities, we had oil up a little, we had nat gas up a little, we had the gold down pretty hard this morning. Same thing with the silver. But after trading all the way down to almost exactly the round number 1900, we came back and closed pretty close to the high. After a decline like this over the last 20 days or so, I wouldn't be the least bit surprised to see us try 1950 pretty much straight away. I mention this because I bought for myself. This was not an alert, not even a level 2 alert, just one of those I'm going to see if I can catch the bottom here. I bought the AGQ, which is the double silver long. Again, coming right down to that 200-day MA, hitting it and bouncing. Not as good as the gold. It didn't close as close to the high as the gold did. But after being down, well, it closed down 28 cents, and it had been about 40 cents lower. So closer to the high than the low, but not quite as impressive. Okay, so besides the GDP number, continuing and initial claims for unemployment were down, substantially down. And again, half the idiots said it was great, half the idiots said it was horrendous. I'm more interested in the actual markets. We had the Dow loving today's action. Advanced declines were only 2-1 there, but the market was up 270 points, or 0.8%. The Nasdaq was down 42 cents. I can't even talk about what the kind of percent that is. And even there, it was about 1.25, 1.25 to 1 to the upside. Volume was lighter again, 4.3 billion. The S&P was up 20 bucks or a half a percent about. I don't have the exact closing number for the Russell, but I do have the percent, and that percent was the leader of the day, up 1.3%. That would probably put the Russell up about 24 or 25. Transports up 107. On the earnings side, we had MU, which had a beat top and bottom. When I told you about it this morning, the stock was 69 and 28, which was substantially higher, 2.5, $3. However, when it actually opened, it never got above 67.95 and traded down as far as 63.55. Last trade there is 64.03, down 304 or 4.5%. Um, their numbers were good. Their guidance was pretty much in line. Um, they're working off their excess inventory, and that I think brings to mind a more important issue. Semiconductors are dramatically volatile. The orders are volatile. When there weren't any 6 months or a year ago, everybody was ordering double or more. Now they're working off inventory, so we'll have to see how that goes. And of course, MU has had its own problems with China. We also had 3 new IPOs today. And again, half the idiots were just so happy that the window is open again. In the meantime, the first two, Fidelis, which is an insurance company, and Kodiak Gas, which is an oil and gas company, both were priced below expectations. And even with that, they were both down on the day, which is not what I'd call overwhelming. I certainly wouldn't rave about it. I mean, it's nice that they got their stock out, and you could take the attitude of, well, it was pretty much unchanged, so they priced it right. What does that say about Savers Village, which came at $18 and closed 22.99, up 4.99 or 28%? Curious, just curious. Okay, so as I said, the bonds were down, Bitcoin was a little higher, the dollar was higher because the bonds were lower and rates were higher. Tomorrow we have personal income, personal spending, PCE, and core PCE. Those are actually pretty important numbers, certainly those last two. And then at 10 o'clock after the markets open, we have consumer sentiment. So there you go. Hope everyone had a good day. I will probably be gone by 10 o'clock tomorrow morning, but I will do a pre opening comment. Have a good holiday weekend.